Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You gonna wear your mask when you go home?
Oh, yeah, I am.
Okay, me too. I mean, we're finding our way through this.
We are. I'm just thinking there are still a lot of people who can't get vaccinated, like really young children.
Yeah.
So I don't know if I'd necessarily want my, 2-year-old who's not vaccinated around a bunch of unmasked people who say they've been vaccinated.
That's a really good point, right? Because it's really, this is, once again, we have to think about our community.
Exactly.
And there's a lot of trust that we're putting in our community. We're going to continue talking with Bill Moss, Dr. Bill Moss, over at Johns Hopkins Bloomberg School of Public Health. In the meantime, let's get back to Doug Krisner
with the world of business news. Hey, Doug.
Hey, Tim. Yeah, equities are trading higher, but we're off session highs. So technically, we are up for the first time in 3 sessions. The Dow right now ahead by about 1.6%. NASDAQ comp better by about 0.7%. Again, off session highs. Energy 0.5%, 63.75 in the active contract. A lot of weakness in Bitcoin today. It was late yesterday that Tesla suspended vehicle purchases using Bitcoin. Today, Elon Musk doubles prices for April, hotter than forecast. Again, last month prices for April, hotter than forecast. Again, last month of 0.6%. 10-year Treasury yielding 1.67%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, let's get back to Dr. Bill Moss, professor of epidemiology at Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder, of course, of Bloomberg LP and Bloomberg Philanthropies. He's executive director in Baltimore. So yesterday we got some more on 12 to 15-year-olds that a group of medical experts saying children in that age group can safely take the COVID-19 vaccine made by Pfizer and BioNTech. How important is it, though, Bill, to getting kids vaccinated, to us getting to herd immunity, or at least closer to it, or more herd immunity than less?
Yes, it certainly, Carol, gets us closer to herd immunity. There are approximately 17 million children in that age group in the United States, and you're exactly right. Food and Drug Administration issued an emergency use authorization, and then we got the CDC approval and endorsement to go. Reasons why it's important for children to be vaccinated. First, it's to protect the child. We know children are lower risk of severe disease, but millions of children have been infected in the United States, thousands hospitalized, even hundreds died, and some children are at risk for an inflammatory syndrome, even if they've had very mild COVID.
Right.
The second reason is just to help our children get back to normal life, summer camp, get to school. And then lastly, really to protect our families and friends and communities, because really anyone susceptible to infection is a potential transmitter of infection.
Dr. Moss, what's a realistic way for us to think about how even younger age groups can get access to the vaccine? Is it pretty typical that if something is safe for 12 to 15-year-olds, it can be safe for 8 to 11-year-olds and safe for 2 to 7-year-olds? Is that a realistic way to think about it?
That's a reasonable assumption, Tim, but it still needs to be studied. And so the vaccine manufacturers, Pfizer, Moderna, Johnson & Johnson, are all studying the safety and efficacy of these vaccines in younger and younger children. This is a typical way that vaccines are studied. You start in adults, and you kind of work your way down in groups of children. So we're seeing studies in children 5 to 11 years of age, and then younger ages, 2 years to 4 years of age, and even under 6 months to 2 years of age. So what has to be looked at very carefully, though, as we get to younger children, is the dosing. And so all the vaccine manufacturers look to see whether a smaller dose of the vaccine will also be safe and effective.
Vaccinating the world is proving to be a lot more difficult, and maybe not as a surprise. Why is it important, Bill, that the U.S. turn its attention to vaccinating the world, and what does the U.S. need to be doing?
Yes, Carol, I think this is the most important question facing the United States right now. It's understandable that we focused on our own population. We had a terrible pandemic in the United States, but I think we're reaching a point where we really need to focus on the world. the bottom line, it's simple. We're not safe here in the United States until this pandemic is controlled, and it's a global pandemic. The more the virus is transmitted, particularly at the levels like we're seeing in countries like India or Brazil, the more chances it has to mutate. And this is the time for the United States to step up, really be a leader in the global fight against the pandemic. And that includes, donating excess vaccine doses, allowing, materials to go to other countries to manufacture vaccines, supporting the COVAX facility, which is basically the mechanism to get vaccines to low and middle income countries.
I'm wondering about variants in vaccines, because the narrative has been for months now. One way to think about the U.S.'s responsibility in getting the vaccine under control around the world is to think about it from a selfish perspective and make sure that variants that can't penetrate vaccines don't come here. Is there any evidence that could or will happen?
Well, what we've seen so far, Tim, is, basically the studies are supporting the fact that our current vaccines authorized for use in the United States are effective against the kind of current panel of variants. There is some reduced protection, or they require higher levels of our protective bodies for some of the variants. For example, the variant that was first identified in South Africa, the B1351 variant. But in general, all the current vaccines are effective, particularly against severe disease, against these variants. So we don't have to panic yet, but we need to be very diligent in monitoring the situation.
All right, we're going to leave it on that note. Thank you so much for your time. Really appreciate it. Dr. Bill Moss, Professor of Epidemiology at Johns Hopkins Bloomberg School of Public Health, Executive Director of the International Vaccine Access Center, and of course the Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies.
Are you going to wear your mask now?
Yeah, I'm kind of comfortable with it.
Yeah.
I will say, though, when I was walking the streets and I had a bag of potato chips I was kind of munching on, I kind of had the mask back and forth.
Outside's a different story.
But my daughter, who's 18, she's like, put the mask back on.
Okay.
She's like rough.
Noted.
She's a tough cookie. All right, let's get a check on world and national news. Over to Ann Cates in D.C. Hey, Ann.
Hi there. The Centers for Disease Control will be issuing new COVID-19 guidelines. Bloomberg is reporting that fully vaccinated people can stop safely wearing masks in most places, including schools and the office. Masks will need to be worn on plane rides and other crowded situations. President Biden says his administration is taking steps to speed up shipments of gasoline to filling stations. The president adds that experts believe they know who is responsible for the attack.
We do not believe, I emphasize, we do not believe the Russian government was involved in this attack. But we do have strong reason to believe that the criminals who did the attack are living in Russia.
Former President Donald Trump could be a wild card in Republicans' hopes to retake the House next year. Bloomberg's Nathan Hager reports from Washington.
A source tells Bloomberg the former president is already studying the races and looking for candidates to endorse in 2022. Bloomberg government's Emily Wilkins reports a Trump nod can be make or break in GOP primary races, but general elections are a different story.
Trump might mobilize Republicans, but he also mobilizes Democrats who don't like him and his supporters.
Another big unknown, the congressional districts themselves. Many of them still haven't been mapped out due to late arriving data from last year's census. In Washington, I'm Nathan Hager, Bloomberg Radio.
A political ally of Congressman Matt Gaetz is expected to plead guilty next week in a child sex trafficking and identity theft case that could possibly pose a legal threat to Gaetz. In the market for a new home, mortgage rates have fallen for a second straight week, dropping to close to the lowest on record. The average for a 30-year loan is at 2.94%. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Cates. This is Bloomberg.
Okay, so I think 4 of the top 10 stories have some connection to cryptocurrencies or Bitcoin or Elon Musk. If I go down a little bit
that
further,
sounds about right.
if I go down to like the top 15, I think you can throw in another 2 or 3. And this is certainly one of the stories that caught our attention. This is actually the 18th most read story on the Bloomberg in the past 8 hours. Has to do with Stevie Cohen, Point72, of course, his investment fund, hedge fund that he founded. He is set to make a sizable entrance into the crypto market, according to several people familiar with the firm's business. This is coming from, I believe,
The Block.
Right? Yeah, exactly.
Frank Chaparro at The Block with this exclusive. Investing from its venture capital arm and deploying long-short strategies on the hedge fund side. So, I think it's no surprise we're seeing more institutional interest and more hedge fund interest in crypto. It just comes at a really interesting time given what happened last night with Elon Musk, because I wonder to what extent that's going to be some sort of inflection point or turning point in crypto or not. I mean, Mike McGlone, commodity strategist here, was on our show earlier today.
What did he say?
He said, he was talking about the price action, and 50,000 is the price target that he had for Bitcoin for the entire year. So he said he wouldn't be surprised to see a few more moves downward, but it's right where he thought it would be for the entire year. So it's gotten ahead of itself price-wise. He doesn't see this. He did not see Elon Musk's move as a big deal.
Right, because I think he and others have seen it even going higher, certainly longer term. What's interesting is, listen, keep in mind that Steve Cohen, at least according to The Block, managing about $22 billion as recently as of April 1st. If he throws a few million at it, it's not necessarily a substantial investment on his end. So I do wonder what will be interesting is if indeed this is the case and how much he goes in on it.
I guess at what point do we get to the point where it's news if some sort of hedge fund doesn't have a crypto investment?
Get big in crypto.
Yeah, that's right.
The firm is poised to get big in crypto, according to one source.
How big?
Get big in crypto. It's all perspective.
It is.
All right. You're listening to Bloomberg Business Week. Carol Master, Tim Stanovic. Coming up, we're going to talk about the big take.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
There has been a little bit of chop in the equity market today, but right now the major benchmarks are higher across the board. The S&P 500 near the best level of the day with a gain of about 1.5%. The Dow right now higher by 1.6%, and the NASDAQ Composite coming back with a gain of nearly 1%. Generally speaking, the tone has been positive today. The inflation reading on the wholesale level was above forecast. Producer prices gaining 0.6% the last month. Even so, we have not only the equity market pushing higher, but long-term interest rates coming down a bit. 10-year Treasury yielding about 166, a loss of 3 basis points on the day. Seeing a continuation of a slump in Bitcoin, down 11% right now. Late yesterday, Tesla suspended vehicle purchases using Bitcoin. Today, Elon Musk kind of doubled down, saying that the recent trends in energy consumption for Bitcoin mining are insane. And Tesla shares right now down by just about 2.7%. By the way, the world's largest cryptocurrency exchange, Binance Holdings, now under investigation by the DOJ and the IRS. We are told this inquiry will include getting information from those with a little bit of insight into Binance's businesses. Dollar weakness right now, and stronger yen, stronger euro as well. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, got it, Doug. Thank you so much. Well, the Bloomberg Big Take also happens to be the cover story of this week's magazine. The cover image is pretty incredible. My producer, Paul Brennan, talking about it earlier. I mean, it's amazing. You got to check it out. It's also the most read story on the Bloomberg today. And Tim, it's about the former immigrant kid who is now worth billions, the so-called Pied Piper of the recent blank check craze. We're talking about Chamath Palihapitiya.
Yeah, if you're on Twitter and you follow Chamath much, he doesn't need any introduction. As we talked about earlier, he's kind of like a one-name person at this point. Joel Weber's editor of Bloomberg Business Week. He joins us live here. And Zeke Fox is finance reporter for Bloomberg News. Joins us on the phone, but he is right here at our New York City bureau. Joel, this is just a fantastic read. And my big takeaway is that even though Chamath's SPACs have really struggled this year, Chamath is going to be totally fine.
Yeah, I mean, that's sort of been the real kind of the kernel of the story that that Zeke, I think, hit on. SPACs for a lot of people came out of nowhere and have become just a theme of the past year. Just years of our lives, and SPACs were one of the things that, in finance at least, became a thing that everybody was watching. And Chamath obviously has been a huge proponent of them. He says he wants to do as many as 26. I think that there's a thing that I'm going to ask Zeke about here, which is, look, like SPACs can be really lucrative for the sponsors, but Zeke, how does it look like they end up working out for the rest of us?
So I looked into one SPAC that Chamath promoted this year called Clover. And when he was taking it public, he was pitching it sort of to the everyday investor as a can't miss, I'm going to 10x your money kind of thing. And since then, if you bought it on the day that he pitched it, since then it's dropped by about a quarter. Of course, you have to wait and see how it works out in the long run. But the real thing that with SPACs is that as a sponsor, Chamath gets 20% of the SPAC as a kind of fee called the promote. So he's out there saying, I've kind of discovered the secret to being rich. I'm going to let the little guy into these private deals that have gotten me where I am. And my interests are aligned with yours. But meanwhile, really, he's making his money off these fees, and the stock would really have to crash very low before he would be in the red.
Well, Zeke, what did you find out about Clover Health when you were doing this reporting?
So the pitch for Clover Health is that it was a tech company that was going to revolutionize healthcare. And if you weren't listening that closely, you might not even really pick up that it was really a health insurance company. And of course, you can find this all out from its securities filings if you're the kind of person who reads those. But really, it's a Medicare Advantage plan that almost exclusively operates in New Jersey. Not really a very big company. And from talking to former employees, one that's had a lot of trouble hitting its growth targets in the past, expanding the way it wanted to. Now, of course, they have this pitch now that they've invented a tech tool that's sort of the culmination of, a decade of their existence that's really going to bring together all their machine learning technology to analyze patient data and recommend treatments, and that this is what's really going to make the company take off. But I hope that the investors that are buying it understand that, this is a pretty risky new business rather than something that is, guaranteed to go up.
Right. And you say decade in business, still losing money, so that if it was being taken public, and it was going on a roadshow, you would certainly see Zeke, it become under a lot of scrutiny.
Yeah, that's sort of the appeal of SPACs for a lot of companies is when you go public, the underwriters are worried about getting sued if they make projections that are wrong. So you're almost forced to dwell on your recent results. So if you're a company like Clover that's losing huge amounts of money every year, but you're on the verge of a turnaround, you say, when you do a SPAC, you can talk more about your great future prospects, and you can, hopefully investors won't dwell on your recent losses. And there's been just like a huge wave of these unprofitable companies with big dreams going public through SPACs this year. And for a while, it just seemed like all of them went up. I mean, almost people were talking about it like it was almost a new asset class. You could just invest in SPACs and get great returns.
Well, and then gravity kind of came in, and things have changed a little bit, and hence the SPACs go splat cover. Zeke, though, I wanted to ask, because despite what we'll publish in the magazine, and despite maybe that data, it doesn't seem like it might stop Chamath, right? And even as you were working on this story, he announced that there was another one coming with a certain gem chain. So how do you make sense of where Chamath could go with his vision of SPACs?
So he has turned himself into kind of a brand name like Goldman Sachs. And if you're a company that wants to go public, maybe you hire a bank to do an IPO. And now people are aware that there's another option, that you could merge with one of Polyhopatia's SPACs. And my big question is whether the brand name can survive one or two bad deals. If it was built on just sort of this to the moon idea, is he going to lose his appeal if he has a mixed track record, like anyone who's bringing companies public is likely to have in the long run? You can't all be winners. But you're right. Just the other day, Bloomberg News broke that he is planning to bring the gem chain Equinox public. But he hasn't raised any new blank check companies for a while, so that's something to keep an eye on if he's raises more, gets closer to his goal of 26, like he said.
It's kind of like, SPACs. Are they a venture capital pool where you're playing around? You know what I mean?
Yeah.
Like that, maybe a lot of them will ultimately play out. But do investors kind of totally get that versus if you go through the IPO traditional route, you're vetted a lot differently?
Well, and to Zeke's point, like how many people get hurt along the way, and what does that do for future interest in the same things, right?
Yeah, exactly. It's a great read, and it is a great cover. We've been talking about it in the newsroom, Joel.
Well, it started with me saying SPACs go splat, and then I think we proceeded to look at as many possible versions of the same idea as possible until we got it right. So
The one you settled on is awesome.
It's really, really wonderful. All right, Joel Weber, of course, editor of Bloomberg Business Week. That is the cover story. It's also the Bloomberg Big Take. Zeke Fox wrote it, finance reporter at Bloomberg News. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, Tim and myself, we're going to come back. If you're listening on Bloomberg 1061 in Boston, Bay State Business is coming up next. It's the cover story. It's online. It's on the Bloomberg. It's on newsstands. You are listening to Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
3 p.m. on Wall Street, an hour remaining in the Thursday session. The equity market trading very near the best level of the day. After 3 days of weakness, we have the S&P 500 higher by 1.4%. Of the 11 industry groups in the S&P, energy, the only negative, a decline for the S&P 500 energy index of nearly 1.5%, and this correlates with weakness in the price of crude oil. WTI in New York is down 3.6% right now. We're trading 63.70. The Colonial Pipeline is back online, although it's running at less than half capacity. We were talking earlier in the day about word that we received. Colonial paid nearly $5 million to European ransomware hackers. We were told this payment was made on Friday in untraceable cryptocurrency within an hour of the attack. Now, we know today as well that the world's biggest cryptocurrency exchange, Binance Holdings, is under investigation by both the Justice Department and the IRS. We are told the inquiry is looking for information related to the operations of Binance from those who might know. Dow Industrial Average is up 1.5%. NASDAQ comp better by about 0.8%. Shares in Tesla showing some weakness now, down about 0.3%, checked at 3%. It was late yesterday. Tesla suspended vehicle purchases using Bitcoin. Today, CEO Elon Musk essentially doubled down on his attack and called the recent trends in energy consumption for Bitcoin mining insane. Bitcoin itself is down 11% right now at 48,362. We have shares in Alibaba showing quite a bit of weakness, down about 5.5%. Earlier in the day, the Chinese e-commerce company reported adjusted EPS below estimates. So we had that CPI data coming in a little hotter than forecast. In spite of that fact, long-term interest rates are down, 10-year Treasury yielding 1.66%. That's your Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So we kidded earlier that, you check out the most read on the Bloomberg terminal right now, and there's a ton of stories that have the word Elon Musk, Bitcoin, crypto, you name it.
It's what the people want, Carol.
Give them what they want. And we certainly are. The big news was that Tesla CEO Elon Musk saying the company is suspending purchases using Bitcoin, triggering a slide in the digital currency. Well, in the meantime, one perhaps positive aside to this, and that is Musk may have just helped ease the semiconductor shortage.
Here to explain why that is Joe Weisenthal, markets editor at Bloomberg News. He joins us on the phone from the New York City Bureau. Joe, why? Explain. How did Elon Musk help with the semiconductor supply crunch?
I mean, look, I think specifically it's not going to move the dial that much. But, I'm increasingly realizing lately that you can't talk about the semiconductor shortage without talking about crypto, whether it's graphics cards, storage cards, equipment for mining Bitcoin. It has become a huge source of demand and contributing to the tightness. And so anything that sort of contributes to the reduction of price, that decreases the incentive to mine coins. And so in a sort of roundabout way, falling coin prices ease some of the stress on the system.
Well, unpack that a little bit more for us. How much does the crypto industry use chips, and what kinds of chips, and what do we know about it?
So there's a range. So Bitcoin is mined with what are called ASICs, and that means that the coins that mine Bitcoin are only used for mining Bitcoin. Of course, they have to use semiconductor capacity, and so they still use, the manufacturing capacity that goes into creating ASICs could theoretically be used for something else. On the other hand, a coin like Ethereum, if you talk to video gamers, many of them are really annoyed because it makes it really hard to get graphics chips. So finding a graphics chip from a company like NVIDIA or something like that, incredible demand from Ethereum users. In China, there's a lot of purchases of hard drive memory chips that are used to mine a chip called Chia. And so basically everywhere you go, there is this intense competition to acquire chips for the mining of some currency or the other.
And I think a lot of people, Joe, think about the energy usage of Bitcoin being associated with the mining, but it's much more than just the mining, right?
Yeah, I mean, I think that's exactly right. So it's like, even if mining as we know it, I mean, there is like the sort of like computationally electricity expensive mining, even if that were to change, there is still like an incredible amount of like server capacity and other demand for hardware that goes into the maintenance of these networks.
Right. So even if, let's say we get, correct me if I'm wrong, but let's say we get to a point where all the Bitcoin has been mined, right?
Yeah.
At some point, it's still going to be very energy intensive to actually transact in Bitcoin.
Yeah. So that's exactly right. So even if, there are only ever going to be 21 million Bitcoin, even after all of them are mined, the miners will still exist and will play a role in securing the network, and there will still be network fees and so forth. And so now it's true that the energy consumption won't scale linearly forever, so it's not going to like continue to grow always, like it will like level out at some point. But that role for miners to sort of maintain the network and conduct the transactions is never going to go away.
All right. So since you are our crypto expert, I mean, help me out here a little bit. First of all, that whole energy thing, Kathy Wood of ARC put out a report last month, and she said crypto mining can drive investment in solar power and make more renewable energy available to the grid. So there's that going on. Yeah. And then layer on top of that, Elon Musk all of a sudden, I guess, waking up and saying, oh, wait, crypto, Bitcoin, I've made investments in it, but it's using big energy. And then he's saying, now we're not going to accept it for late transactions at Tesla.
Yeah, it's super weird.
How do you put this all together?
So I'll say two things. I mean, one, the Elon thing is just like super weird because like he obviously knew, right, that this was energy intensive. It's been known for years. This has been something out there. So the idea that suddenly he woke up, it's like, actually, I'm not that comfortable with the energy. It's a little bit strange and hard to understand what's going on. You do hear it, speaking of Kathy Wood, these people in the industry saying, well, this will drive a search for renewables. I don't know. It's not that convincing because even it is true that a lot of mining is done with renewables, whether it's hydropower or solar power. That is still theoretically energy that could have been used for something else. So, I mean, I do get on some level it does incent energy information, but it's not an airtight case.
Yeah, I mean, I think what's particularly surprising to me about this is that nothing new changed with nothing new came to light about energy usage in Bitcoin. And at the same time, I wonder if this is going to be some sort of turning point in the way that people think about Bitcoin and cryptocurrency, because I can imagine there are some people who say, okay, well, I've heard about the environmental concerns about this, but Elon Musk he's quote unquote an environmentalist. I mean, he's creating by market cap the world's largest electric car company. He wants to change, he wants to get rid of fossil fuels.
And has been a great, though, also poster child specifically for Bitcoin.
Yeah, so if he does it, it's cool.
I think that's exactly right. And I think, look, there's been a lot of debate lately about Bitcoin's energy consumption. And I think, it's like we don't know what the regulatory status of cryptocurrencies is ultimately going to be in the United States. But I do think, especially if you look at who, occupants of the current White House, climate change, energy, these are very important things for them. So I think Elon, it's a narrative thing. Here you have such a prominent person saying, you know what? Even I'm uncomfortable with the energy consumption here and what it means for the environment. It doesn't help the sort of like ESG narrative that the industry would like to see.
I'm blaming the SNL guys. I mean, they must have sat him down the after party, Joe. I'm thinking, they're like, come on, Elon, let's talk about this Bitcoin thing.
Yeah, exactly right.
Like moving on from Dogecoin, but let's talk about Bitcoin and energy. Listen, great stuff and an angle we hadn't thought about, so thank you for bringing it to us. I think it was in the 5 things to start your day also this morning.
Thank you.
Yeah, you bet. Joe Weisenthal, markets editor, Bloomberg News, on the phone in our New York City bureau. That 5 things, I put it out every morning. It's like my favorite read because
it's a great way to start the day.
Yeah, and it just takes you to places that it's, business world, it's the economic world, it's markets world, but it also takes you to physics, it takes you to space, it takes you to everything.
I want to know if I don't even know if Joe's still with us, but if he writes it the night before or the morning of.
Joe's gone.
I think he's gone.
He's writing.
Right. I'm gonna have to ask.
He's
him
writing the next column.
Yeah, he is.
He's probably starting it. All right, you're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. Coming up, we're going to get to another story in the magazine. If you've been scratching your head about the inflation data and market reaction, we're going to kind of tell you how to make sense of it all. We'll get to our own Peter Coy in just a moment.
In the meantime, let's get a check on the latest world and national news with Ann Cates in D.C. Hey, Ann.
Hi there. The operator of the nation's largest pipeline paid hackers nearly $5 million in ransom shortly after they brought operations to a halt. According to Bloomberg, Colonial Pipeline sent the money, an untraceable cryptocurrency, to cybercriminals believed to be in Eastern Europe or Russia. President Biden, meanwhile, says the federal government has ramped up efforts to get gasoline to filling stations. The president says it may take a few days to get back to normal.
But I want to be clear, we'll not feel the effects at the pump immediately. This is not like flicking on a light switch.
The Centers for Disease Control now says people who are fully vaccinated can resume most activities without wearing a mask or practicing social distancing. Americans who've had their coronavirus shot will still need to wear a mask on airplanes and other forms of public transportation. Ohio is offering its residents a shot at winning $1 million along with their COVID vaccine shots. Governor Mike DeWine announced that beginning May 26, the state will draw the name of one vaccine recipient to win $1 million.
We have people who are never going to get it. We have people, 42% of Ohioans now have already got it. Then we've got what I call the persuadables in the middle. And it's not just getting them to do it. Some of them may eventually do it, but getting people to be vaccinated now as opposed to a month or 2 months from now.
The drawing will happen every week for 5 weeks, and to qualify, you have to live in Ohio, be 18 years old or older, and have at least one dose of the vaccine. Meantime, COVID-19 deaths are at their lowest rate in more than a year. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Cates. This is Bloomberg.
All right, over $1 billion served, and now they're getting paid more, those that are behind the counters, apparently.
Not all of them, though.
No,
Not
that's
all
true.
of them, yeah. So big news this morning, McDonald's boosting average U.S. wages to over $13 an hour. The hikes, and this is important, at company-owned stores have already begun, the chain says. The company expects to reach an average wage of $15 an hour, that by the year 2024. Not as quickly as I think some politicians want to see.
All right, so we're talking about more than 36,500 employees are slated to receive this round of hikes. They've already started. They'll be fully rolled out in the coming months, according to the company. So average hourly wages across all company-owned locations are expected to reach $15 an hour by 2024. What's interesting is I'd like to know how many are franchised.
Yeah, well, there's 650 company-owned stores in the U.S., but franchise locations where management makes its own decisions on wages will not necessarily be raising wages to these levels. However, franchises are looking at wages too. That's according to the chairman of the U.S. National Franchisee Leadership Alliance telling Bloomberg News.
All right, and McDonald's also looking to hire 10,000 new employees at those company-owned stores over the next 3 months alone. Listen, we have heard this from Chipotle. We've heard this from the restaurant industry in general, that they are looking for workers, and they're not coming back as quickly as they had anticipated as they open up. So some are, raising the hourly wage. Some are offering bonuses. They're looking for ways to bring workers back because, listen, that's going to limit their growth and their ability to meet customer demand. This is where you're going to see, we talk about transitory, this is where you're going to see that disconnect, that until workers come back, the supply chains, kind of come back fully, you're going to have these dislocations, if you will, between supply and demand within our economy.
So this is something I want to talk to Peter Coy about in just a minute. But as we heard from Vince Signorella yesterday and also Michael McKee talking about keep an eye on wage growth for true signs of inflation. And just today, we get this news from McDonald's and also from Amazon that it's going to hire 75,000 logistics workers in its latest hiring binge and increase those wages too.
Right, exactly. And how does that play forward? Do we pass it along to customers ultimately? Do they pick up the payment of it? So this is a good question for Peter. And we're going to get to him in just a few minutes right here on Bloomberg Business Week. This is Bloomberg.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We're making our way to the closing bell for a Thursday. That's in about 43 minutes from now. The equity market trading very near session highs. Let's get the very latest as we cross to the Bloomberg Macro Squawk Desk. Bill Maloney is here with an update. Hey, Bill.
And good afternoon, Doug. U.S. stocks in the green today, although NASDAQ did turn negative at one point. Dow's currently up 538 points. S&P's up 60. NASDAQ higher by 115. The U.S. 10-year yield at 1.67%. Gold is up 10, and transports gained 352 points. Among the main 11 S&P sectors, only energy was in the red, and leaders to the upside in the Dow, Home Depot, and J.P. Morgan, while only Chevron fell. After earnings, Sonos rose as much as 12%, and in other news, McConnell says he's hopeful for an infrastructure bill, and Colonial Pipeline paid the hackers nearly $5 million in ransom. In deal news, Canadian National is expected to sweeten the Kansas City Southern bid. And wrapping things up, some of the names pointing after the bell tonight include Walt Disney and Coinbase. Live from the First Breaking News Desk, I'm Bill Maloney. Doug.
All right, thanks, Bill. Speaking of Disney, shares up now about 0.4%. And while we're at it, Bitcoin down nearly 11%. Obviously, we had the news late yesterday. Tesla suspending vehicle purchases using Bitcoin. And then today, Mr. Musk, the CEO of Tesla, kind of putting a little bit more fuel on that fire. He called recent trends in energy consumption for Bitcoin mining insane. I'm Doug Krisner. That's your Bloomberg Business Flash.
Doug, you're going to have to put that Bitcoin back in the bank.
You know, I was thinking about something. If the issue, think about energy consumption, but it's the servers that throw off tremendous amounts of heat.
Yeah.
So if you can continue to mine for Bitcoin, but channel that heat into something that's productive, maybe that's the solution. I don't know. I'm just saying.
And I guess I tend to lean against the new conventional wisdom, which seems to be that inflation is really totally fearsome and scary as heck. Lean more in the direction of saying, hey, come on, calm down a little bit. This is not such a disaster. And I think that's the way the markets are reacting today.
Right. Hey, folks, I've seen a few cycles before. No, but Peter, what's interesting is, though, here you have a day, McDonald's boosting average U.S. wages to over $13 an hour. They're hiring 10,000 workers. Chipotle also raised its average hourly wage to $15 an hour. Amazon hiring, and they're also paying more workers. Wage inflation is something we watch very closely. And we've had folks on air, our own, I think, Carl Riccadonna, maybe Mike McKee, saying that unless something has changed structurally in the ability of workers to demand higher wages, you know, longer term, you know, that's when we start to run into trouble.
So, like, if wages notch upward by, say, $2 an hour, and then that becomes the new normal, that's, by definition, transitory. That's a reset to a kind of maybe more appropriate level. Maybe workers were getting underpaid. Unless it gets to the point where it's going up and up and up, and that companies are raising prices to compensate for it, and then workers demand higher wages to compensate for higher prices. That's a wage price spiral, which is scary, and that is something to watch out for sure. But we're not seeing evidence of it yet, and that's why the Fed is like, for now, we're still on hold.
So what's the important data point for us to keep an eye on?
You know, I would keep paying attention to wages. My story includes the employment cost index, which is a better measure of inflation in wages than you get in the average hourly earnings figure that comes with the jobs report last Friday. So yeah, watch that, and that's high. Not denying it. I would pay more attention to that than I would to say what we're seeing in commodities. You know, gasoline is going to bounce around. It always has. Same with iron, copper, lumber, cotton. These are things that are inherently volatile. And the closer you get to the consumer, the less volatile prices tend to be. So that's why the CPI is more important to look at than, say, for example, today's PPI, which is also on the high side.
Good stuff.
PPI being producer price index, of course.
Yeah, right. I'm still scratching my head a little bit because I feel like it's the conversation, Peter, we have only got about 20 seconds, but we have it every day. And
I know.
And I guess we have to have not just 1 month, but more months. right?
Exactly.
Okay.
Let's wait. Let's watch a few more months and see what happens, and then we can make more of a decision.
Peter Coy, thank you so much. Economics editor at Bloomberg Business Week.
I want the data now, though.
Patience. Patience, my son. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
And this is our most read story on the Bloomberg in the past 8 hours. In fact, don't give it away, Tim, but it is a Bloomberg exclusive.
Okay, I can't give anything away?
You can give a hint.
All right, it's about ransom and Colonial Pipeline. Too much of a hint?
Hint?
Too much?
Yeah, but it is about that.
Okay.
That was like giving the story away. All right, anyway, we're going to talk about this.
It's a great story.
It is a great story.
Scoop.
And it is a great scoop. First up, though, let's get back to your top business stories. Another check on that trading day. 29 minutes to go. I don't think Tim knows what a hint is.
Yeah, I can take it much farther if you would like.
All right,
Mention
take it away.
$5 million maybe.
Thank you. I appreciate that.
You boys stick together.
So we're going to hear from Disney after the closing bell today. The stock is popping about 0.7%. Analysts, generally speaking, are the most positive on Disney that they've been since about April 2020. So this is going to be a very interesting window into consumer behavior. Think streaming, think theme parks. The co-heads of Bank of America, the investment banking unit, going through a little bit of a realignment here. Jack McDonald is said to be leaving the company, and Tom Sheehan is going to become the sole head of investment banking at Bank of America. The stock right now is popping about 2%. That's really not reflective of this story. Generally speaking, the financials are trading higher today, even though we're seeing a drop in long-term interest rates. A 10-year Treasury now yielding 1.65%. We're down more than 3.5 basis points. The equity market very near session highs. We did have that hot reading on PPI. Looks like the equity market is really trying to look beyond that. We can get into this issue of whether transitory inflation exists or will exist. We don't really know. It's only in hindsight that we can make that statement, I think, fairly. Dow Industrials up 1.7%, S&P 500 higher by 1.6%, NASDAQ Comp rising 1.1%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. So let's get to another of our most read stories. In fact, we just mentioned it is our most read story on the Bloomberg in the past 8 hours. It's a Bloomberg exclusive, and it is about the $5 million in ransom paid by the Colonial Pipeline to those Eastern European hackers.
Michael Riley, cybersecurity reporter at Bloomberg News. He joins us on the phone from Washington, D.C. Michael, first of all, congratulations on this amazing scoop. Take us through the details here, because what you and William Turton found is that this payment actually happened on Friday, despite reports as recently as yesterday of the contrary.
Yeah, that's right. It's been an interesting dynamic over the last 24 hours, because there were some major media reports yesterday that Colonial Pipeline was not going to pay the ransom. And it's an interesting question, because as we've all been watching over the last week or so, since Friday, since the attack became public, it's had a huge impact on the U.S. economy, especially fuel supplies along the eastern seaboard. And it's a really hard thing to say for companies in this position, to say, we're just not going to pay the ransom. And it turns out, in fact, it was a relatively easy decision for Colonial. They paid the ransom, and they paid it really quickly. And part of the reason you do that is because that's the easiest way you can try and get the pipeline started again, because when you pay the $5 million, all of this is in cryptocurrency, so it can't be traced. What you get in return is a tool that the hackers give you that says, okay, you can use this to unlock the computers we've just locked up and try and get your systems up again.
Okay, so if they paid the ransom on Friday, why is this still an issue right now?
Well, it's a lot. It turns out one of the interesting things about the way that ransomware groups work is they spend a lot of time developing really good tools to encrypt the computers, because that's how they make the money. But the tools that they give you to decrypt them actually don't work very well. So it turns out it's really slow to try and decrypt all of these encrypted computers. And they've struggling with that. They've struggling so much that they decided to in fact, try and sort of stand up a lot of these locked up servers with backups anyway. So it wasn't necessarily a huge help to get this tool. But one of the other reasons why companies pay is these ransomware groups have this smart trick of stealing sensitive data from these networks before they encrypt them. And so Colonial was sort of faced with possible public release of this data, and Colonial and pipeline companies have a lot of sensitive data, customer data, shipping data, and they just wanted to avoid that.
Well, listen, this plays into national security. I mean, energy is what keeps a company, not a company, excuse me, well, a company, but also a country going. And you can bring it to its knees, essentially. What's interesting is, though, Michael, I do wonder about, we've all seen kind of the police shows and stuff. It's like, don't pay the ransom, because you just encourage people to do more of this because they know that they'll get paid. But did Colonial really have a choice?
That's the quandary here. It's like the FBI, the U.S. government is really going out and asking, almost pleading with companies, don't pay the ransom. But it's like, as somebody said this week, it's like asking parents who had their, the kid kidnapped not to pay. It's like, in this case, you're not dealing with human life, but you are dealing with, a lot of very urgent things, including, gasoline that needs to get to cities all along the East Coast. It's like, can you really ask them not to pay if that's an easier way to sort of let this get the pipeline working again?
Right.
So to me, this story shows what we've seen since Friday, just how vulnerable we are. I mean, it basically says, hey, it's open season and we are the targets.
That is one of the demonstration effects of this. It's like how impactful these attacks can be, and when you can have that kind of impact, companies don't have much of a choice but to pay, and so of course that's going to create more attacks. The real question is, are we going to see something from the U.S. government that might be an effort to show a counter demonstration effect? In other words, going after these hackers so that they become an example of what you shouldn't do if you're a ransomware group. It's really hard to say.
One thing I want to ask you, and I do think about it from an investment perspective, is, and for all of our listeners on Bloomberg Radio and those who are watching on Bloomberg YouTube, it's that cybersecurity, we've been talking about it, the importance of it for years. I always think of Jamie Dimon way back when he talked about one of the biggest concerns, and it was all about security, cybersecurity. So what's going on in the cybersecurity industry and companies? Because I've got to guess that companies are scrambling at this point to make sure that they're protected after seeing something like this.
Well, it certainly does create a lot of scramble. I mean, I'm sure executives, C-suites all around the country, but especially in the energy industry, are asking their folks right now, are we vulnerable? Is there anything more that we can do not to be vulnerable? Do you need any more money to sort of improve the systems? But it's not a really easy set of solutions. It's like there are companies that have better cybersecurity and companies that have worse cybersecurity. There are some accounts that Colonial cybersecurity wasn't that great, and so you might see just extra spending, which always helps. But it's hackers. There's so many ways that they can get in.
Yeah.
And as we know, there's so many products on the market now. It's like after 10 years, you'd think we'd come up with a better solution, and we just haven't.
Yeah, you think I got this. It's not a new problem.
It's really scary.
No, it's terrifying. Michael, you guys, great reporting. William Turton, Michael Riley, and Jennifer Jacobs putting this story together, and it is the most read story on the Bloomberg in the past 8 hours. Michael is cybersecurity reporter at Bloomberg News, joining us on the phone from Washington, D.C.
Well, speaking of Washington, D.C., let's get the latest on world and national news with Ann Cates, who's in the newsroom in D.C. Ann.
Hi there. Fully vaccinated Americans can now ditch the mask in most cases. The Centers for Disease Control has updated its mask guidance, saying people who've had both shots can go to work, school, or other places and don't need to wear them. People hopping on airplanes or other forms of public transportation still do need to wear masks. The Biden administration is taking steps to speed up delivery of gasoline to filling stations. President Biden says the nation's largest pipeline company is also ramping up.
This morning, Colonial reported that fuel is beginning to flow to a majority of the markets that they service, and they should be reaching full operational capacity as we speak.
More than 150 former Republican governors, Congress members, cabinet officials, and others are threatening to leave the GOP and establish a third party. And now the group has released its conservative vision statement. Bloomberg's Amy Morris reports from Washington.
The 13 principles include a commitment to democracy that supports constitutional order, ethical government, rule of law, recognizing open economies with limited regulation, and truth. It opposes disenfranchisement of voters and, quote, fear-mongering, conspiracism, and falsehoods. Organizer Evan McMullen says the group plans to raise tens of millions of dollars to recruit and support candidates in the midterms. Republican leaders believe voters will back Donald Trump and any down-ballot candidate aligned with him. In Washington, I'm Amy Morris, Bloomberg Radio.
U.S. officials say they'll try to stamp out wildfires as quickly as possible this year as severe drought tightens its grip across the West and sets the stage for another potentially destructive summer of blazes. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Cates. This is Bloomberg.
All right, Ann, thank you so much. So, got to say this story when we saw it and crossed the Bloomberg. And listen to Bloomberg Radio, don't go anywhere, but also search us on YouTube right now on Bloomberg Global News, because this story is about the giant mice that are all over Australia. And as a result, the farmers there are having to turn to some banned poison. I mean, the video, we're going to bring it up for you guys on YouTube because it is disgusting.
Okay, so their viral video has been going around and it shows a giant vacuum sucking the mice up from storage containers. Oh, I mean, it's indescribable. Like, it makes your skin crawl if you have a thing. Okay, yeah, now we are showing it on YouTube right now. It's like Attack of the Mice. We have a video.
Ben, remember Ben? Oh, that was a rat, though, wasn't it? Okay, sorry. Going back a few years.
We had video on Quick Take from Sibylla Gross,
Yes.
and she talked about how some people have been forced to sleep in their cars to try to get away from mice, and she mentioned in the video that people are waking up to mice nibbling on their toes.
Okay, now I'm totally grossed out.
Do you regret choosing this story?
No, farmers are struggling to protect their crops. This is why it's an important story. It's from what they're considering the worst rodent invasion in decades. And so some of the footage that you can see on YouTube right now shows carpets of mice scurrying across barn floors, crowded around machinery, entering thick grain silos made of steel. There's even been reports of, as you just said, farmers' feet being bitten. But what's interesting is there's a video of a giant vacuum sucking up the mice from storage containers, and it's just unbelievable that they are just everywhere. It's spreading across New South Wales, Queensland, causing havoc to crop yields and contaminating sorghum exports with animal droppings.
Yeah, it's this has serious implications, not just for the environment, but also for food production, as you mentioned. I can't get past the video though. It's stomach churning.
Yeah, exactly. We've stopped playing it. We know you want to calm down a little bit, but
thank you.
Yeah, all right. This is definitely catching our attention. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
The equity market is trading near session highs with about, less than 13 minutes to go until the closing bell. Dow Industrial Average right now ahead 1.7%. S&P 500 higher by more than 1.6%. Now, we're seeing a recovery in technology shares, and that is helping to send the NASDAQ Composite higher by a little bit more than 1.1%. The chip stocks are rallying. Philadelphia Semiconductor Index is up about 2% right now. We are getting indications from South Korea of an ambitious plan to spend roughly $450 billion U.S. to build the world's largest chip-making base over the next decade. This comes under a national security blueprint from the administration of South Korean President Moon Jae-in. It will be led by both Samsung Electronics and SK Hynix. We also have, after the bell, the earnings report from Disney. This is going to be an interesting window into consumer behavior. We've got the streaming services and the theme parks. And overall, analysts seem to be the most positive that they've been on Disney since about April 2020. We had a reading on CPI this morning that was, I checked that PPI, that was above forecast. So inflationary pressures building on the wholesale level as well as the retail level. That was the number we had yesterday. 10-year Treasury, even so, is down nearly 4 basis points in yield. We're at 1.65%. I'm Doug Krisner. That's your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 and a half minutes left in today's trading session. We've got a few earnings coming your way. Disney will be breaking them down with our Beyond the Bell team in just a moment when they come out after the closing bell. In the meantime, we're pretty much at our best levels of the session when it comes to the S&P and Dow. We just heard Doug breaking down those numbers. NASDAQ still having a tougher time, but it too has bounced back.
Still more than 1 percentage point.
Exactly. Much different than we were a little bit earlier today. So let's get into it with Mira Pandit. She's global market strategist at JP Morgan Asset Management, joining us on the phone in New York City. Mira, good to have you here with Tim and myself. So how do you distinguish today's trade, where we got a hot inflation numbers, producer prices, versus yesterday's trade, where we got a hot inflation number, which was consumer prices?
Well, thanks for having me. And I think that ultimately investors are nervous that higher inflation means higher rates. But look, if the Fed is willing to stay the course on rates, then higher inflation that's coupled with higher growth doesn't need to be a bad thing. And I think that markets are waking up to that today. In fact, it can be a sign of healing and recovery. And I think that.
But why didn't we see that way yesterday? Why didn't we feel that way? Are Peter Coy making the distinction that when it's closer to the consumer, higher prices maybe then mean higher wages, which mean higher prices, which mean higher wages, and you get into basically a wage price spiral?
Well, I think that while we are seeing some legitimate wage pressure, overall, the Fed still looks like it wants to remain on target. And I think that the gut reaction yesterday was this is going to go off into an environment where we're going to see higher rates right away. That's going to hurt things like the tech sector, and that's going to become a bigger market headwind. To today realizing, look, some of this is really just friction from the fact that the economy is reopening. You know, last year we turned the economy off with a light switch. You can't turn it back on without a bit of an adjustment period. We're seeing that in supply chains. And I think that a lot of that is going to work itself out throughout the course of the year.
But to Carol's point, is today the difference between yesterday and today, those initial jobless claims that seem to be showing a strengthening labor market falling this morning to a pandemic low?
Absolutely. I think that plays into it, where a lot of investors were rattled by the jobs report last week coming in weaker than expected. Are people going to come off the sidelines without a bit of wage pressure? But when we look at the body of the different jobs indicators we have, jobless claims as one of them, we're seeing that there still is some strength in the labor market overall. So we can't take one report and extrapolate too much off of that, especially when there's so much real-time change going on.
Yeah, exactly. Like, let's remember where we were roughly a year ago, right? We have to kind of put it into perspective. We fell off a cliff. I know I say this a million times, but we fell off a cliff. And now we have, found our way back. Is part of it too, Mira, that the Fed has to be, and they've said this, I think, time and time again, that they are willing to risk having a little bit of inflation going a little bit hot to make sure that we don't fall back when it comes to economic growth, because building or getting ourselves out of the hole is tougher than getting in the hole in the first place.
That's right. The Fed has said we are willing to, on average, get to 2% inflation, but we're willing to overshoot that a little bit, because remember that inflation was incredibly subdued over the last decade. From a labor market perspective, not everybody in the labor market equally felt that healing until perhaps the end stages of the recovery. So I think that the Fed really wants to make sure that there's proper healing from this pandemic before they make too many moves in terms of rates.
I'm wondering about wage pressures. It's something that people we talk to over and over again tell us to keep an eye on. And I thought of it this morning when I saw the news from McDonald's that they're raising wages for the employees in company-owned stores, Mira, and also Amazon saying they're going to hire 75,000 people, and those wages will be higher than they've been in the past. Is that a sign of wage inflation?
Sure, I do think we are going to see a little bit of wage inflation. I mean, what we saw in the jobs report, too, is that actually some of this is a bit more sticky than perhaps people originally thought. We've been talking a lot about various compositional effects, but really when you strip those out and control for that kind of pre-pandemic, we are seeing a bit of an acceleration in wages. But similar to inflation, you have to compare it to the fact that wage inflation has been very subdued over the last 10 years. So we are recovering in that sense as well.
What do you make when stocks and bonds are going up together? We don't necessarily see that correlation, but, yields, we kind of settled down. We actually moved down today.
I think when we see stocks and bonds moving together, it is this sign of recovery in that the stock market is feeling a lot of optimism about accelerating growth, really robust profits, and equally that's being reflected in yields as inflation and growth get stronger. I think it's kind of an early cycle indicator that things are moving in the right direction.
All right, so let's put all of these macro ideas to work. You've got to do it over there at JP Morgan Asset Management. So clients come in, big institutional clients come in, high net worth individuals. Like, what do you say? Where is it that we want to be allocating new money at this point?
I think from an investment standpoint, from an inflationary picture, when we're seeing higher inflation and higher growth coupled together, we are still leaning into some of the more cyclical or more value-oriented areas of the stock market. We've seen a robust recovery in particularly some of those cyclical areas, and there's more to go from an earnings standpoint. We're really focusing on quality companies with good earnings. If the dollar continues to weaken, international stocks, particularly because people haven't quite priced in their recovery yet, I think has a lot of room to run. And then some of those classic inflation hedges, areas like commodities, real assets, REIT infrastructure, can also provide a lot of value to clients and also kind of help them sleep at night if they are worried about inflation pressures.
The infrastructure play, how are you kind of strategizing around that when it comes to political action or policy action?
So what we're thinking of in terms of how the policy implications are likely to take place is that we're going to see a lot of negotiations over the next month and probably throughout the summer. If any part of the infrastructure bill is going to pass through budget reconciliation, which just requires that simple majority, so effectively only Democratic support, that can happen anytime before really September 30th. So I think we're going to have a long lead time in which there could be some bipartisan agreement, or there could be, portions passed through reconciliation. Either way, it stands to reason that a lot of these initiatives are likely to play out and pass ultimately in one form or the other.
Mira, are you recommending that the clients keep cash on the sidelines right now? Like, there's going to be some sort of further dip, at least in equities, where things will be less expensive if they want to get in?
Look, I think that yesterday, today, the last couple of days when we had seen a correction represents a good time to get in. I wouldn't recommend being in cash right now just because of all the momentum we're seeing within the economy and the fact that even if we do see a bit of a dip or a bit of volatility, the fundamental backdrop is still so strong that I don't think it's worth trying to time in and out of the market and get the timing right. It's better to just get in sooner and reap the benefits, even if there is a bit of choppiness.
Just quickly, 20 seconds, where don't you want to be in this market environment right now? Just quickly.
I think we want to pay attention within fixed income to some of those longer duration bonds as we do see yields rising. So we really want to head towards the shorter end of the curve and shorten up in duration. That's really one of the areas where investors are going to want to be a little bit careful.
All right. Really appreciate your thoughts, the macro ideas, and then putting it to work. Mira Pandit, she's global market strategist over at JP Morgan Asset Management, on the phone in New York City and talking with us as we have seen certainly an interesting market day. We're pretty much just coming off our highs of the session when it is the S&P and Dow that we're talking about. NASDAQ well off its lows, but also a little bit of a turn down in these last few minutes of trading. All right, folks, get ready for Beyond the Bell with our team over at Bloomberg TV.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, and Taylor Riggs counting you down to the closing bell. And here to help take us beyond the bell, our global simulcast team ripping off their masks. Carol Massar and Tim Stenovic bringing together our Bloomberg television, radio, and YouTube audiences worldwide. Another wild day, Carol.
Well, kind of ripping off the worries about inflation. What happened? We got CPI yesterday, guys, and we were all worried. We get PPI today, not so much. Our Peter Coy, economics editor at Business Week, saying, you know, the closer it is to inflation is to consumer, Tim, that's when you get worried because you're worried about wages going up, you're worried about prices going up, and this kind of wage price spiral really happening.
Yeah, it could turn into a vicious cycle, but it doesn't seem, at least that equity investors are concerned about that happening anytime soon. I think the big difference with today, at least when it comes to the equity markets and the way that investors are reacting, is those initial jobless claims falling to a pandemic low, kind of showing a strengthening labor market despite the not so great numbers that we got last Friday with the jobs report.
Yep, all Tim, of course, as we push forward to some of the big earnings that we're awaiting. We know, of course, Disney is on deck, Caroline, as we get further guidance about, well, how much this has to do not only with some of the wage increases that we talk about, but really the reopening, the streaming plus, the moat that they've built around that, and the theme parks. Can they play to both worlds? Something we cannot wait to get to.
And I feel like Disney, Airbnb, even Coinbase, all of the earnings we're going to get speak to some of those trends that are in the market today. Romaine, you pointed out so well on our call earlier, the fact that Coinbase speaks to the crypto, like volatility, the Elon play that we had today, but also Airbnb, our desire to get out there and rip off those masks.
Yeah, we're going to dive deeper into that on What You Missed a little bit later here. Well, let's get you into the closing bells. We should point out, over the first 3 days of the week, we saw a huge decline. The Russell was down 6%, the NASDAQ down 5%, the S&P down 4%. You see them fighting back, trying to recoup some of those losses on the week. The S&P 500 right now looking like it's going to settle up about 49 points, up 1.2%. The NASDAQ up about 93.7%, and the Dow Jones Industrial Average back above 34,000, up 433 points, up about 1.3%, Carol.
All right, do want to get to Coinbase because it's crossing the Bloomberg terminal as we speak. First quarter net income, we're talking about $771.5 million, had seen $730 million to $800 million. First quarter EPS, we're looking at $3.05 a share. And first quarter revenue, it looks like it's a little light, but just a hair, $1.8 billion. Estimate was $1.81 billion. And we're taking a look quickly at the stock here in the after hours. And let's just take a look at Coinbase because it certainly is a great indicator when it comes to what's going on in crypto. It's down about 1.4% here in the after hours, guys.
Actually moving a little bit lower now, down 9%.
Oh, is it? Okay.
Yeah.
And of course, as we get some of these further earnings, which we will bring you when they come, let's just recap of sort of what a big day it was. Total exact opposite of what we saw yesterday when the only thing that was green was one sector. For the radio audiences, actually, there are only two sectors that were in the red. It was a very broad risk on rallies. So we start with the losers. It's energy and autos. We've talked a lot about the chip shortage, some of the concerns about energy with the reopening of that pipeline. And then finally, we just end up here in the positive. You're up 2.7%, 2.4%, 2.3% with banks, communications, transportation. That really is sort of that risk on theme, Carol, that we've continued to see.
All right, let's check at some of the gainers, folks. I want to talk about Nucor today because that stock announcing a buyback, a $3 billion buyback plan as their stock hits a record, and it ended up the day up about 5%. Take a look at some of the chip names. We saw a bounce back when it came to Lam Research and AMAT also getting higher, and Peloton, our top NASDAQ 100 gainer, up almost 7%, Romaine.
Yeah, and we're looking out for those earnings. Airbnb closed down on the day, down about 3%. Those earnings crossing the wire are right now. 1Q gross bookings coming in well above estimates, $10.3 billion. The street was looking for 7.5, give or take a couple here. So a big beat beat there. The loss came in at 195. That's wider than what the street was looking for. The street was looking for a loss of $1.10 here. The company giving a forecast here, expecting 2Q revenue to be at a similar level to that of Q2 2019. So I don't know exactly what Q2 2019 was, but that's the guidance that they're giving right now.
Yeah, very interesting.
Yeah.
Perhaps seeing some of those year-over-year numbers, and indeed this was that reopening play that we've continued to see with Airbnb, Romaine, and some of the other companies like Disney, of course, that we continue to wait for, as how much is this a reopening play and that permanent shift or not within some of the consumer habits, Caroline?
Yeah, really digging into some of their numbers overall. And it's sort of interesting that they're talking about, you know, trying to hark back to a 2019 number when that should be pretty good, strong numbers. If you think second quarter 2019, just as we were pre-COVID, this was when everyone was wanting to be getting out traveling, down though 4.6% after hours. What does this spell for Disney, of course, as we all start to see the desire to get back into, well, going out, enjoying ourselves, getting into some of the parks.
Look, you make a really good point. Disney would love to see 2019 numbers at those theme parks, and that, according to some analysts, could be years away. While we wait those Disney earnings, though, let's get to some of the decliners that we saw on the day today. We heard Taylor talk about the pressure facing energy today. We saw that play out with Occidental Petroleum, among other energy stocks. Occidental finishing the day down more than 5%. Bumble taking a tumble down more than 14% today, hitting an all-time low. It beat on revenue, but outlook was disappointing for for this current quarter. Poshmark down more than 22%. Guidance for the second quarter revenue missed midpoint estimates. And then Tesla sliding just around 3% today. That after those Musk Bitcoin tweets, guys.
Should he stop tweeting?
Musk Bitcoin.
that's the eternal question, Romaine.
The SEC says yes.
Depends whether you're into Doge or into Bitcoin. If you're into Bitcoin, you don't want him tweeting today, guys. Interestingly, what's also down? Commodities hit hard, whether it's China, of course, trying to ramp in some of the upward trend that we've seen across some of the metals in particular, or also whether we're just seeing a cooling overall of the run-up that we've seen in commodities. Steel down 4% for our radio audience. Brent crude off by 3.5% as well. Oil really speaking to that. Is that a catch-up to some of the negativity we saw in stocks in the last couple of days? Is that about China and talking about the pullback in commodities? Is that more a story of where inflation goes? But Brent crude off by 3.4% at $66.95 is where we trade. WTI crude, a similar move. Meanwhile, maybe a bit of a bid to safety in European hours. Saw the Swiss franc up by 0.4%, Japanese yen up by 0.2%. But overall, the Canadian dollar coming down from that lofty levels versus the US dollar as oil seemed to fall. Taylor.
And of course, what else was falling is bond yields. That's yield lower, it is priced higher. We had a relatively soft 30-year auction, of course, and we are getting some Disney earnings. I'm going to pass that on over to you, Caroline.
Fiscal second quarter earnings per share, 79 cents. Adjusted earnings per share, a massive beat above the 32 cents that wasn't expected. Second quarter revenue, 15.6 billion. Basically in line, ever so slightly shy of their revenue. But their subscribers, guys, falling below expectations. This is where we might have thought a bit of a pullback as people want to get back out into their parks, into experiences. We're not addicted to the TV so much. Netflix posted this. Second quarter Disney Plus subscribers, 103.6 million users. The estimate, Romaine, was for 110 million.
Yeah, and it was interesting, too, because a lot of people expected that those subscriber numbers to hold up, of course, as the parks business got back up and running. I believe Bob Chapek himself is going to be on the Bloomberg Network at some point later this afternoon, so maybe we can pose that question to him. But, with the parks reopening and people buying their tickets, I heard Taylor has already bought a ticket to Disney World here. You would think that would act as a little bit of a tailwind here as far as the forecast goes. I wonder why we're not seeing that just yet.
Listen, I think the Disney Plus number is a big one. And you're right, Caroline. Netflix, they had already come out and talked about, slower growth when it comes to subscribers. But what's interesting is Disney has really changed its focus. It's really leaning in big time into streaming. And you had WandaVision. It's been watched several times at my home. You've had The Falcon and the Winter Soldier. So they have been releasing some big time Marvel content pieces. And so you would have thought that might have provided some momentum. So that's going to definitely, Tim, be seen as a disappointment on the street.
Yeah, Carol, Disney shares down about 4% in extended trading right now. I mean, the number to watch out for was certainly that subscriber figure. At the same time, Disney over the last year just really blew it out of the park when it came to Disney Plus subscribers, exceeding the wildest expectations even over the next few years. We have to keep in mind, though, when it comes to parks and the parks reopening, there are still those capacity restrictions. So even though we saw that data about it being sold out at certain points over the next few months. 35% capacity, that'll happen relatively quickly.
I mean, Bob Chapek, of course, talking about the recovery and the reopening, of course, playing to one big side of the business, that is theme parks. He talks about increased production at the studios, Caroline, the continued success of the streaming services. And remember, they talk about this multi-year sports rights deals for ESPN and ESPN+. I don't want to comment too much and opine, but Caroline, Richard Greenfield over at Lightshed Partners said that his number one question to the company is why are ESPN and ABC still a part of Disney? So very interesting that Bob Chapek, of course, saying they have a good plan for ESPN and ESPN+, as you talk about, well, of course, also within the Disney Plus platform that has been so successful.
It's interesting that we're dropping so hard after hours as well, because what has been priced in, Carol, to this stock? Because this is a stock that has significantly underperformed in 2021, only up about a percentage point. Well, the S&P 500 is up about double digits. So they've lagged in the 2021 share price, but only one, I think they've got like one sell on the street overall. Most people are committed to this stock and are seeing 26 buys, 6 holds, just one sell. We're off by 3.8% on the back of these numbers. Disappointing on the streaming side.
Right. Can't wait to see what the analyst community says tomorrow, with them being the most bullish in a year. Just a recap, Disney, second quarter adjusted EPS, 79 cents a share, big beat versus the estimate of 32 cents. Second quarter revenue, 15.61 billion versus an estimate of 15.85 billion. But again, that Disney Plus subscriber number remained. That was disappointing.
And we should just point out, once again, Bob Chapek going to be on the network in the 5 p.m. hour here in New York time. I want to just be real clear, though, on that Disney Parks business, because a lot of people are looking at that. Just to put this into perspective, you're talking about revenue in the quarter of about $3.1 billion. That's down about 44% year over year. But keep in mind, pre-pandemic, this was basically a $5 to $6 billion a quarter business here. So a huge drop off here. If they're able to sort of get that back up and running, Tim and Carol, then you do have a situation where Disney is back to what investors expect it to be. This is a pandemic-driven decline here in revenue. We're coming out of that pandemic. We got the word today, mask off, everyone out.
Yeah, we got our masks off here in the studio. I do wonder, though, guys, just how long it's going to take for the parks and revenue to get back to where it was to pre-pandemic levels. As Cowan has pointed out, it could take up to a few years to get to that point, but this, after recessions, that's typically what happens. But this is a different type of recession because there is still that pent-up demand, and we saw what consumers have done when it comes to saving money, so they have that money there that they're willing to spend. So only the future will tell us.
Yeah, DoorDash coming out. First quarter revenue, it's a beat, 1.08 billion versus an estimate of 995.7 million, so some more earnings. But I got to say, mask off, Disney ears on as the parks reopen. So we'll see what analysts have to say tomorrow. That's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and YouTube. We'll see you back tomorrow at the same time, same place, everyone.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And you are listening to Bloomberg Business Week. Carol Masser along Tim Stenovic, straight to the White House, the Rose Garden, President Biden making some comments on the vaccine and virus. Let's listen in.
Please wear the mask. Thank you.
Is there any update on your meeting with the Republicans, sir?
We had a very, very good meeting. It was great to be back with so many of the colleagues that I had served with in the Senate, and I am very optimistic that we can reach a reasonable agreement. But even if we don't, it's been a good faith. There's a good faith effort that's been started.
Compromise on anything other than the corporate tax?
We didn't compromise on anything. What we did was I laid out what I thought we should be doing, how it should be paid for, and my colleagues in the Senate came back and said they'll come back to me with a counteroffer of what they are prepared to do and fund and how to fund it. And then we'll talk again next week. So thank you all so very much.
All right, that was President Biden. We caught kind of the tail end of some comments today. Of course, the big news coming from the CDC that we can take off masks if you've been fully vaccinated. And that is not just outside, but we're talking about being in buildings. But the president also making some comments about having a very good meeting with the GOP on infrastructure, saying we didn't compromise anything in talks. I'm just checking out on the Bloomberg some of the headlines, saying, though, he will not enforce masking. And we're not talking about, I guess, arresting people for not wearing masks. masks.
I mean, I don't.
Or wearing masks.
I mean, I think we'd be to the point already where that would happen. We're over a year into this pandemic. Biden, though, to recap a little bit more, Carol, is saying that we didn't compromise on anything in talks with those very good meeting with the GOP on infrastructure. So perhaps there will be some movement there. The president also says we are not done yet when it comes to the pandemic because too many people are unvaccinated. He asked people to treat those who are wearing masks with respect, as you mentioned, Carol. And he still said not vaccinated or fully vaccinated people should mask.
Yeah, exactly. So listen, this is kind of our world, and we were getting further guidance about how we reopen, and we have certainly seen here in New York City a lot more people back in offices, certainly in our office here at Bloomberg headquarters in New York City, but just in and around as you go, you see it on the roads, people are commuting more in, but just the buildings and traffic certainly out there on the streets.
Yeah, and look, we were covering Disney earnings, DoorDash earnings, all the earnings at the bell when the president was speaking, but just getting caught up on what he was talking about when he started speaking just about 4 o'clock, a little before 4 o'clock today. He said that today is a great day for America when it comes to the virus battle, and that's certainly how we felt when it comes to the shock that we had when the CDC said, hey, if you're vaccinated, you don't have to wear masks inside. That is such a big deal.
Listen,
it is such a big deal.
If you think about the last 12, 13 months, kind of how far we have come, right? Or just think about where we were last spring, and you were kind of afraid to go outside of your home and walk around. So it's a big deal. And again, we've got to take steps carefully as we move forward. But nonetheless, it's a big step, I would say.
And I think a big part of this, too, has to do with getting that 70% of Americans vaccinated, getting to that goal that the president outlined just a few weeks ago. He wants, by July 4th, 70% of all adults to have had at least one shot. And we've spoken to public health experts over and over again who said, perhaps we need to be clearer with the benefits of the vaccine and how much your life changes after the vaccine.
Right.
And hey, the proof is here with the CDC, which has been very conservative throughout the pandemic.
I mean, there are distinctions, and we've heard it certainly from the medical community. If you are vaccinated, nothing's 100% secure, but you are 96, 97, I mean, it's a lot more.
But there,
in terms of being protected against the virus.
Exactly, and it's not just about not getting it. It's about not being seriously sick or dying from COVID if you get the vaccine. I mean, that's a really important number in the vaccine data that is there. It's about also protecting you if you do get sick.
Yeah. So anyway, it's something that's going to take us in certainly to the Friday trade. We'll see how that kind of maybe plays into just people's optimism about the world reopening. You have a good night.
Thank you.
All right. Good stuff. A lot of earnings there. And speaking of earnings, we got to talk about Disney because the stock's down about 3.7% here in the after hours. This is after the company just reported its latest quarterly results. Down in the after hours, probably because of the performance of its streaming service. That Disney Plus falling well short of forecasts. Let's get into it with Tuna Amobi. He's media analyst at CFRA Research. He is with us once again on the phone in New Jersey. Tuna, it's so good to have you here with us. So the stock's down about 4%. Does that feel about right for you? Because analysts were pretty optimistic going into this earnings report.
Good afternoon, Carol. No, I think it's a little bit surprising to us that the subscriber numbers, streaming subscribers, came in a little bit on the short side. Also the revenue miss, but it seemed like pretty much they had a good grip on the expenses. But the closely watched subscriber number, that's something that I think it's putting pressure on the stock. That being said, Carol, we knew that this past quarter was always going to be the bottom and reset of sorts. And looking ahead, we still think that the overall thesis remains intact for acceleration in the second half, in the fiscal second half, as the reopening continues to take hold.
And a little perspective. I mean, the Disney Plus ramp up is still pretty impressive, correct? And kind of getting closer and closer to nipping at the heels of Netflix.
Indeed. I mean, there's no reason for us to believe that the longer-term target for Disney, Plus to north of 200 to 250. Up to 260 million by fiscal 2024. That should remain intact. You're going to see, short-term volatility there. Hulu and ESPN Plus, if you kind of throw that in the mix. And I think the critical thing is also which I expect more color in the launch of the Star-branded, offering that was just launched in February.
Europe,
that should be exactly, and around the world as well.
Well, so, okay, and I'm just looking at some numbers. So let me just think. Netflix reported 207 million global subscribers at the end of March, and I think we were thinking about 163 million for all of Disney streaming platforms, like you mentioned, Hulu and ESPN Plus. So I guess we'll get some more color, as you said, on the call about that. But numbers around that area are pretty significant.
They are. So I think we always knew that there was some pull forward impact as a result of the robust, subscriber acceleration we saw with the onset of COVID-19. The question was not, if, but by how much, and I think that's what's playing out right now. That being said, I think you're going to see things start to, cycle back. And, I don't think that, a lot of people think the stay-at-home theme is going to wipe away all the gains that these streaming platforms have made as the reopening takes hold. I don't think so. I think a lot of this has to do with structural changes in the way consumers, consume content, and a lot of shift away from traditional and legacy television.
Yeah.
So the runway has been significantly expanded, I would argue, due to this pandemic around the world. North of 1 billion households now looking for some type of streaming, and way underpenetrated in a lot of the international markets.
Disney's an interesting company, right? It definitely benefited with Disney Plus and streaming during the pandemic, but it's also a reopening play as well. When you think about the theme parks, when you think about the ships, when you think about content and movie studios and, big theatrical releases. So how does the reopening play look for Disney right now?
It's looking actually as good as it can, and that's exactly right. The legacy businesses, as I said earlier on, should be coming off a bottom this past quarter. As we kind of look out even the next year or couple of years, we see earnings accelerating significantly higher on the back of a lot of these legacy platforms. Remember, the streaming business still operate at major loss, which is expected to peak this year, and when that turns profitable by fiscal 2024, that's when you really see the growth engine really rev up significantly. And one more thing is that Disney just coming off price increases, as you know, just a few months ago. So some of these noise we're seeing around the subscribers, question is how much of that had to do with the potential churn. We don't think it's a kind of a major factor to worry about, given the value proposition for Disney Plus has now been significantly raised by this rollout of Star entertainment offering.
So what would you want to be asking Disney on the call today, Tuna?
Well, there's a lot of questions around the NFL contract they just added, which I thought, frankly, of all the major networks, all the major companies, they came out as major winners. So we're going to be looking to hear a little bit more on how they want to, monetize the ESPN Plus component, and also the update on the Star rollout around the world, which should be still ongoing, and impact that had on the subscriber numbers. So those are some of the main questions. Also, the theme park attendance trends, given the reopening. We know they're still operating way below their capacity levels, so we want to get some update on that, especially since the reopening of California parks.
Would you expect that as, it goes from reduced occupancy at the parks to it's all open, that people are just going to come running back? I mean, that's an easy play if you've got kids, right? And if you still want to stay traveling domestically in the United States, that's an easy way to get an experience as the world reopens.
I would completely
not
agree
cheap,
with that.
not inexpensive, but it's an easier way to do it.
Absolutely. The anecdotal evidence is showing there's tremendous pent-up demand. And while they're still operating at, like almost 35 to 50% capacity, they're selling out even tremendously. So, and remember, pricing is still fairly, they haven't gotten into any major discounts or promotions. So all of that tells us that there's tremendous appetite for consumers looking to get out there.
Hey, when we look at, Disney, I mean, it's got a bunch of moving parts, but what is still, like, for such a long time we talked about how ESPN was the juggernaut for this company. What is still the juggernaut for Disney?
Well, the theme parks and the media networks, they're always going to be the cash flow engines. But investors are now pivoting away gradually into to streaming as the focal point, and we're going to see that take even more prominence when this streaming shows an inflection, and we think that's around the corner. So while they're still in a loss-making situation, the reason why Disney, by the way, is doing a huge valuation multiple now is because investors are now reimagining the company as a digital kind of streaming play as opposed to legacy, which granted is still throwing off sizable cash flow to be reinvested. So, we think the next 3 or 4 years earnings power is going to triple, potentially quadruple, and that's why you see this premium multiple going to get even more attention and deserved.
Tuna, that digital streaming play that investors are looking forward to and looking at them, that inflection point that you say is just around the corner, do they need to add to that streaming portfolio, or can they do it with the existing structure that they've got?
Well, streaming is such a business where you just can't sit still. Is unbelievable competition. There's a lot of streamers now breathing down Disney Plus's neck, and that's why they're adding about 100 original titles every year, and that's also why the streaming spending for Disney is going to quadruple from about $2 billion. This fiscal year, potentially to $8 billion by 2024. Everyone is on that rat race. Discovery Plus, Paramount Plus, everyone, just about everyone, and that's the only way you can really stand out from this cloud. Netflix, of course, they set that bar really high. So that's what's playing out here. Is going to be battle, and I would argue that to win this war, you've got to really bring your A game, and that content is really where all it begins and ends.
All right, so the Disney shares, as you know, they had actually a pretty good year in 2020, up about 25% after falling off a cliff, like so many other names last year when the economy shut down. But it's not doing a heck of a lot this year, despite analyst optimism. What will be ultimately a catalyst for the stock in your view? Because it certainly wasn't this earnings report.
That's right. The shares have stalled, as you rightly observed. The main catalyst, we think, is going to be this acceleration and consistency in the streaming subscriber growth, which we think, and then also turning profitable on the streaming business, which the company is guided to about this year being the peak loss year for streaming spending. So when that kind of begins to turn around, you're going to see more and more attention focused on that, and rightly so. The one thing is not going away is the cord cutting. Pay TV ecosystem is under pressure. So companies that can demonstrate, that transition and make that leap, which Disney arguably has better position as anyone out there, in a very enviable position with the content pipeline, very robust. And when the theaters reopen, remember ESPN, the live sports return, they're huge, beneficiary of that. So that's something also that will play into the overall thesis and get investors back focused on the traditional sources of cash flow, which are the theme parks and media networks as well. And the NFL contract also locked in for the next decade is going to be something. It's really going to be interesting how ABC getting back in that Super Bowl mix and how they all monetize that.
Got to say, I feel like the current quarter is going to be a big one, and I feel like it's going to be highly anticipated when it gets reported. Tuna, always great to get your view on the media world and especially on Disney. Tuna Moby, he's media analyst at CFR Research, on the phone in New Jersey. Disney Plus subscribers falling short of expectations. One of the key takeaways from that Disney report. Second quarter fiscal park reopening, studio ramp up are priorities, according to the CEO. That analyst call happening are also on the release. Company reporting an EPS beat, revenue below estimates, and Disney shares we saw under pressure in the after hours. The stock is down about 4%.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
And this is Bloomberg Business Week, live from our Interactive Brokers studio in New York City. Coming up, we're going to talk about the fitness area, which was hit really hard by the pandemic and the shutdown, especially when it comes to gyms. We're going to check in with the CEO and founding partner at Crunch Fitness franchise. Ben Midgley will be our guest in just a second. First up, though, a lot of earnings after the close. Doug Krisner keeping track of it all. Hey, Doug.
Hey, you got that right. So Disney reported subscribers for Disney Plus a little below estimates, and the stock right now is down about 4%. We also heard from Coinbase after the bell. First quarter revenue beat, total sales $1.8 billion. That was pretty much in line with guidance, maybe a little bit below what the average forecast was. Net income kind of at the midpoint. This stock has been bouncing around in late trading. Right now I have it weaker by about 0.3, checked at 3.8%. DoorDash reporting revenue way above estimates. Those shares higher now by more than 8%. Generally speaking, there was positivity in markets. We finished slightly off the best level of the day. The recovery story seemed to be in track with a very good report on weekly jobless claims, a fresh pandemic low on that front. Maybe that kind of dominated the PPI report. We had a hot reading on wholesale inflation, a gain of 0.6% month on month. But that really wasn't new news if you think back to yesterday and that CPI data, right? Already struggling with this notion that we're going to see a pickup in pricing pressure. Dow Industrial Average today higher by 1.3%, S&P 500 up 1.2% on the session, and the NASDAQ Composite climbing about 0.7%. 10-year Treasury last quoted in New York at a yield of 1.63%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. You're listening to Bloomberg Business Week. Now, the fitness industry was not impacted equally during the pandemic. Those with in-person facilities, storefronts, gyms, man, they were hit pretty hard. Those who could pivot quickly, often to digital, fared a lot better. Some, including fitness equipment providers, think Peloton fared pretty well during the pandemic shutdown. Here with what's going on, though, in the world of Crunch Fitness is Ben Midgley. He is CEO and founding partner of Crunch Fitness Franchising, and he's on the phone in New Hampshire. Crunch Fitness Franchise. Let me slow down, Ben, so I can get it right.
You got it right. You're perfect.
Say it 5 times fast. Hey, how are you?
I'm great. How are you, Carol?
I'm doing well. It's an interesting day where we're being told by the CDC we can take off our masks inside if you've been fully vaccinated. What's going on in your world, and how does it compare to where we were a year ago?
Well, a year ago, we shut down around March 15th, all the clubs across the country as the whole industry shut down. And it was extremely hard on us and our franchisees. We're primarily a franchise-based company. The owners had to really dig in and do a lot of things right to make it out the other end. But a year ago, if you look at March from March, we actually, I believe, are the only major brand that actually increased our members over the last year. We were at 5.6%. While our primary competitors were down anywhere from 12 to 35%. So even surprised us a little bit. Yeah. It was a fantastic outcome. And there's a lot of things they had to do right along the way. But, we're coming out the other end a bit stronger than we thought we would. And we're really excited about what's going to happen. And the surge is going to come.
Well, I want to hear about
positive surge going forward.
I want to hear about the future. Why do you think you're up 5%? What did you do? What are members telling you? Why are they coming back?
Yeah, so, we look back at that a lot. And what was interesting is if you look at our existing member base, which I think is where most of the health clubs lost, we only had a 2% drop in our existing members, which was fantastic. And then when we reopened, basically all of them came back very quickly. And we think that's due to a couple of things. One is the community feel you get in the clubs. I think a lot of people are just missing that interaction due to such an elongated shutdown. Mm-hmm. Our clubs, we're in the low price, high value space, but we have a lot more in our clubs than most competitors do. You've got the weights, you've got group fitness, you've got the ride, you've got HIIT classes, personal training, a relax and recover area, just a tremendous amount of things. So more reasons, I think, to come back to the club than some of the other clubs might offer. And then member trust was big. the trust of our members that we were doing the right thing for them was important. We stopped billing when we should, when some other brands didn't. I'm sure you saw that in the news.
That's what I wanted to just remind us what you did, because I know that there's been places that I supported just because they were small businesses and I didn't want to see them go to the downside, so I was still paying. But what did you guys do? Did your members, to keep the membership intact, did you waive monthly fees? What did you do?
Well, we bill every day in our business. So if you joined on the 12th, you get billed on the 12th. So as the days came up, which we closed around the 15th and the 16th, we began to stop billing people immediately after that. Now, there was a little bit of a rolling closure, depending on the different states. It didn't all happen within 2 days. It kind of rolled in. But then we sent out guidance to all the clubs and the franchisees. They're independent business owners, but they're extremely receptive. And from a company standpoint, the best and the right thing to do is to stop billing members immediately and then, bill when you reopen. So that's what we did. And some other companies took a little bit of a gamble and, continued to bill or waited till that next tap on the April 1st and just figured we'll try that. And that obviously stung a lot of people, and that was the wrong thing to do.
All right, so interesting. But that explains, too, how you were able to kind of hold on to your membership, right, those numbers.
Yeah, and I think the other aspect of that is, the clubs took cleanliness really safely and safety precautions extremely seriously. I believe we were...
I mean, as they reopened?
Yeah, exactly. And prior to that, we were, I believe, the first club to have our readiness plan out and to our franchisees. We had it out to them within 3 weeks of the closures. So that gave them a really good tool to work on to make sure they were prepped and prepared to open. And then, the franchisees just did a great job with member communication, team training, and facility preparedness. So, it's all on their shoulders, all the credit. And then, of course, the PPP loans, the EIDL, all that sort of support, that really helps them get through it, too.
Yeah, we talked to Jim Rowley over at Crunch, and he talked, I think we talked to him about the reopening plan, and it was pretty extensive, a lot of pages, if I recall.
Yeah, it was about 40 pages, and it was a really big team effort with the franchisees. Jim led that process, of course, and it was important. But it's one of those things as franchisees you probably look at and say, "Geez, this is a lot of writing." But when you look back a year later, you think, "Hey, this was great to have."
Well, you have a playbook now in place, and I do wonder: are you guys planning for maybe another shutdown in the future? We're already talking with the medical community about the importance of booster shots, and people are marking their calendars about, I got the 2 vaccines, but 6 months from now, I've got to get a booster shot. Otherwise, we could see, a flare-up. Are you guys planning for figuring out how to maybe deal with another shutdown anytime in the near future? And we've got about 30 seconds, and we'll come back and talk some more.
Well, we're not planning for it. I hope it doesn't happen. But we
you know
have
what I
the
mean.
Playbook, right? We have it down. That's down for this type of a situation. I mean, the trick with business planning is you're contingency planning. How wide do you go? You've got to look at natural disasters and all sorts of things. So we're trying to constantly expand our contingency planning and emergency planning for whatever situation arises.
All right, sit tight for a second, Ben. We'll do a little bit of news, but then we'll come right back to you. We are talking with Ben Midgley. He's Chief Executive Officer, founding partner at Crunch Fitness Franchise, joining us on the phone from New Hampshire. As we mentioned, the fitness industry definitely hit hard, but definitely, like the rest of the world, finding its way back as the economy reopens. Quick check and just reminder of how we finished up the trading day here. The S&P 500 up 1.2%, up 1.3% on the Dow Jones Industrial Average. NASDAQ up about 0.7%. Those equity averages finishing way off their lows of the day. All right, let's get to world and national news. Ann Cates, she's in our 99.1 newsroom in the nation's capital. Hi, Ann.
Hi there. The Centers for Disease Control has issued new COVID-19 guidelines. The CDC says that fully vaccinated people can safely stop wearing masks in most places, including schools and the office. President Biden says the announcement is a major step forward.
I think it's a great milestone, a great day. It's been made possible by the extraordinary success we've had in vaccinating so many Americans.
A political ally of Congressman Matt Gaetz is expected to plead guilty next week in a child sex trafficking and identity theft case that could possibly pose a legal threat to Gaetz. Former President Donald Trump could be a wild card in Republicans' hopes to retake the House next year. Bloomberg's Nathan Hager reports from Washington.
A source tells Bloomberg the former president is already studying the races and looking for candidates to endorse in 2022. Bloomberg government's Emily Wilkins reports a Trump nod can be make or break in GOP primary races, but general elections are a different story.
Trump might mobilize Republicans, but he also mobilizes Democrats who don't like him and his supporters.
Another big unknown, the congressional districts themselves. Many of them still haven't been mapped out due to late arriving data from last year's census. In Washington, I'm Nathan Hager, Bloomberg Radio.
In the market for a new home, mortgage rates have fallen for a second straight week, dropping to close to the lowest on record. The average for a 30-year loan is at 2.94%. Housing supplies, though, remain tight in many parts of the country as people moved to new houses as the pandemic got underway. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Cates. This is Bloomberg.
All right, Ann, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Interactive Broker studio. Joining me once again is Bloomberg Daybreak Asia anchor Doug Krisner. And Doug, I've kind of been dying to do this story. I saw it on the Bloomberg yesterday. It was among our most read, and it talks about Bill Gross's successor, over at Janus Henderson, and he's 44. He's calling it quits. He's hitting the road.
Unbelievable. So what do you think is motivating that?
What's interesting, I don't know if you saw, there was a fascinating story in the Washington Post over the weekend. Peter Atwater over at William & Mary pointed it out to me, but it's this whole reassessment of the workforce, and people are, because of the pandemic, to some extent, those who can afford to, those who are maybe older and looking at retirement, are just thinking about the stresses of the last year and kind of thinking about the past year, and where they want to kind of focus their time and efforts.
I remember an interview that you did on this program with an individual whose name escapes me now. This gentleman had been working from home, but he said to you that for the last several months he's been able to enjoy breakfast with his children, and after this period of time, that's something that he doesn't want to give up. So you're right. I mean, there's been a lot of, I think, self-examination. The pandemic has really allowed people to maybe shift to priorities in their life. I mean, work is important, yes, but so is quality time with the family.
Yeah, and it's pretty interesting, right? You know this. You've lived on both the East and West Coast. The East Coast, it's so driven, and it's, you go to a cocktail party, and the first thing people are like, what do you do? And you get an idea of what, where somebody's, status is in this world. I mean, this is a job. He had one of the most elite jobs in money management, the head of global bonds at Janus Henderson. They oversee $400 billion. He was probably making a lot of money, but, you do kind of sometimes rethink your world.
I'm wondering if you're going to hear many more stories like this, where someone in a very high position has maybe squirreled away a little bit of capital. They are not necessarily compelled to work. They feel that they've got what they need to continue with life, and they're just going to kind of re-examine what's important to them and act accordingly.
I've had two conversations with members of my family just about this thing. All right, Doug, thanks.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
A lot of earnings news after the bell. We'll begin with Disney. The company said that subscriber growth for the second quarter was a bit below estimates, and the stock right now in Disney is trading off in the late session by about 3.7%. Coinbase reported first quarter revenue below estimates. Now, initially, there was a knee-jerk response. The stock traded lower, but there is a recovery now happening in the extended session. It seems like the market may be focused on Coinbase's huge revenue growth. The company went from 172 million in total transactions, that would be in revenue a year ago. In the last quarter, 1.8 billion. DoorDash, first quarter revenue above estimates, and that stock right now is higher by about 8%. So a lot going on. Generally speaking, it was positive for the equity market today. We came back after 3 days of weakness. Dow Industrial Average higher by 1.3%. S&P 500 up by more than 1.2%. The NASDAQ Composite meantime with a gain of 0.7%. Democratic Senator Tammy Duckworth and Republican Senator Jerry Moran have introduced a bill to authorize $30 billion in grants to gyms and fitness facilities. Obviously, they've been at a big disadvantage through the pandemic. Shares in Planet Fitness today were up by more than 4.8%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much for that update. A lot of earnings, and be sure to listen to those flashes as well as check out Bloomberg.com for more. Hey, let's get back to Ben Midgley, Chief Executive Officer, founding partner at Crunch Fitness franchise, still with us on the phone from New Hampshire. So making your way back, are all the franchises coming back? Did anybody have to shut down permanently?
Over the last year, including international, we shut down a few clubs, single digits.
Okay.
Some of them were pre-planned. You know, the locations were too small or had to move them or what have you. But I'd say probably only about 4 out of 350 were pandemic related.
And then, so how are you thinking about the reopening trade and the reopening of the economy? It's something I got to tell you, Ben, we are trying to assess day to day. A lot of CEOs and leaders aren't giving a lot of visibility still. I think we understand we're going to have a significant bounce back around now and maybe probably into the next quarter easily as things reopen and there's a lot of stimulus money out there. But how do you see it, and are you confident to make some significant investments in terms of expansion at this point?
Sure. For us, I think we're certainly on the more optimistic side, and we're not shy about that for a few reasons. Some not great, but at least for our industry, one is we've had a loss of a lot of competitors, which I say that with a heavy heart because you never want to see a lot of folks in the industry, which I've been in for 30 years. So I know a lot of these operators have lost the businesses, but it's estimated that about 17% of the health clubs have closed in the industry, which actually during your break, it mentioned the Joint Senate sponsorship for the Gyms Act, which is fantastic. So hopefully that will get traction and get passed and be able to provide support to industry operators. But there's a significant loss of competitors, which means there is more market share to go around. Real estate is softening. A lot of tenants went out of business, so landlords have become much more open and accommodating to bring in a 25 to 30,000 square foot tenant that can bring 6,000 to 7,000 people into the center. So that's worked out really well. For us, our brand's getting stronger. As our footprint expands, we're getting more exposure, so more people are looking for Crunch to come into the neighborhood, and the momentum we carried throughout the pandemic has really helped us, right? If we opened about 40 clubs last year and we grew in membership, so for us, that's a really good sign as things open up and people get back out. We've only got growth to go from here. So
Equinox, I always say it wrong, you know them well, a competitor, and they're talking about, going public via a SPAC. How does that potentially, and maybe some new capital being put into them, certainly a well-known chain just like you guys, how does it maybe change the dynamics for you in the competitive landscape?
I don't think it changes the competitive dynamic for us. We're in the game for a while now. We've got a longer-term view. As you know, we had a transaction with TPG Growth just a couple years ago. I know you and Jim have talked about that several times. They're fantastic partners. They love the business, and they, like we, who've also invested in the business, are very focused on where we can take this. I think looking at Equinox, that's going to be interesting to watch, right? That's really the first time something like that could happen in our industry. If that works out, they had significant losses last year, and they're looking for a big valuation. So we're going to certainly keep an eye on that.
Right.
See what happens with that, but it won't change our game plan going forward.
Okay, it won't change it in any ways. It's interesting. Well, you know, it is fascinating, too, the private equity world. My former co-host, Jason Kelly, has written about it in his book, Sweat Equity, about, you know, private equity and their involvement in the fitness world. How are they really great partners for you guys?
Well, I mean, every private equity firm is different.
Fair.
Right? So I can only speak to the ones we've had experience with, but our current partner, TPG Growth, is extremely engaged. They did a tremendous amount of diligence on the business. I mean, they're a fantastic company, obviously part of the greater TPG that, you know, has a tremendous amount of business ownership at you know, spotting trends and how businesses are going to perform in the future. So, you know, they did a lot of research on our space. Obviously, we've always been bullish on it as management. You know, we grew this company from no franchises 10 years ago to almost 1,300 sold, right? And we're approaching 2 million members here pretty quickly, so it's all worked out pretty well. And, you know, TPG Growth brings a lot of sophistication into the business, perhaps that we didn't have before. So we're just starting to take advantage of that and see those changes come into motion, which I think is really going to, you know, accelerate our growth going forward.
So one thing I'm curious about is what's next in the future. I'm someone who's done yoga for a long time, and my yoga instructor, who I've studied with for years, was able to do things digitally, and she's really carved out a niche that she really wasn't doing before. You know, she was traveling the world, you know, teaching courses and teaching in her hometown as well. But what's interesting is I was on a class the other day, and someone was in Japan, someone was, you know, all over the country. And I do wonder about the digital role in the fitness business. How do you guys embrace it? Will it be important going forward, or not as much as the world reopens in your view?
Well, I think from that standpoint, in terms of the individual operators that you talked about, it's fantastic that they can expand their business, right, and help getting people healthy, which is the goal of the industry. Anyway, you cut it, our goal is to help people get healthy. So the more people that are exercising, the better. In terms of digital, it is important. Obviously, there was a boom in it. I think any brick and mortar business has to integrate that properly. Most of the companies in our industry, they certainly don't have the chops to go up against you know, Apple in that space, or Peloton, or you know, some of these others, Beachbody, that have been doing it for years. But you can certainly integrate really high quality content into your offering to supplement what your members are doing. We've been in the space for a while with something called Crunch Live, and our workouts, which you guys have spoke about before, you know, jumped up to about 100,000 workouts a day. They've gone down a bit since then, but we've certainly looked at this as something we need to reinvest in and make an even higher quality product, because our members do appreciate that. That doesn't mean they're going to drop their health club membership and switch over, but it is a supplement. And as far as the greater industry goes, you know, there's 60 million members of health clubs in the U.S., and prior to this pandemic, the industry was growing at 3 to 4% for about 10 years. So as we come out of this, we do expect that growth is going to continue to grow at that rate, maybe even faster. And then one thing that a lot of people don't think about is about 30 to 50% of the people who work out at home or have a you know, some sort of supplemental exercise routine that they do also have health club membership. So it's not a really a either or, you know, option. That they can complement each other and grow together.
Well, listen, really great to check in with you, and I hope we can do so again a little bit later in the year and see how things are going, especially as the world, fingers crossed, masks off, we continue to reopen. Ben, take care, stay safe. Ben Midgley, CEO and founding partner over at Crunch Fitness Franchising, on the phone in New Hampshire. All right, folks, wrapping up a really busy Thursday. Some interesting inflation data on the producer side. We did see markets certainly bounce off their lows, finishing with gains. DoorDash coming out with their earnings. We're seeing that stock move. In the after hours, just a quick check here, it's up about 7%. Disney also, that stock moving in the after hours following their earnings, some disappointment over the streaming numbers. So it's something we're going to continue into tomorrow's trade. Stock right now, we'll talk about that a little bit later. Have a good evening, everybody. This is Bloomberg.